And good afternoon. Thank you for joining us for our latest episode of Discuss with Russ. I'm Russell Rivera, founder and president of Voice Wealth Management. This is our 18th episode, episode 18, and my guest this afternoon is Jack Craven of Media CPAs. And as usual, we'd like to welcome all of our viewers watching this live on Facebook and Facebook Live and Zoom, and of course our follow-on viewers on YouTube. For those of you tuning in today for the first time, the Discuss with Russ series has focused on helping you get through the crisis and start thinking and planning for what the world might look like as the crisis dissipates. Now that most of us can leave our homes and see each other face to face again in some way, shape, or form, we want to help you anticipate possible responses in society's behavior. You can be most prepared to succeed. My firm, Voice Wealth Management, primarily works with entrepreneurs, young professionals, and their families to help them get the most out of their money. While I'm a chartered financial analyst and certified financial planner, many also see me as their personal CFO and financial therapist, recognizing the psychological power of money in addition to using short-term and long-term planning to help you get the most out of every dollar you earn and use. Now joining us is Jack Craven. Jack, CPA, is founder of Media CPAs. He has over 30 years experience helping companies and clients in technology and media sectors. His practice not only helps individuals with their taxes, but he also works with companies as fractional CFO. Prior experience also includes being CFO of several large media corporations, including American Media. Additionally, he is chairman of BevNet, the leading company in the space of promoting and connecting companies in the food and beverage sector. Find out more about Jack and his work on his website, mediacpas.com. As for housekeeping issues, there is a Q&A tab at the bottom of your screen for asking questions. So please use that question to ask questions of myself or Jack, and we'll get to them as they're appropriate during the program. And of course, this show, as usual, is being recorded. So we will tell you how to access that recording as well as all of our recordings at the end of the program. With Jack, thank you for joining us today. Welcome to the program.
Thank you, Russell. I'm glad to be here.
Great. Thanks for joining us. So we just passed what is the 2020 tax day, the initial tax deadline a few weeks ago in July. And, you know, we hear that there are still millions of citizens who haven't filed taxes. This may seem like a silly question, but is not filing taxes, not paying taxes that big of an issue?
Yes, it is. I mean, especially if you're like a couple of weeks late, you know, there could be penalties, but it's probably not a big issue. I tend to work with companies and people who haven't filed tax returns, many years worth of tax returns. That's a big issue because there's criminal penalties. And just not filing a tax return, it's hard to get a loan from a bank, a mortgage, you know, everybody wants to see your tax return. So I would call it a very big issue.
And I guess we're kind of all famous with familiar with like famous tax evaders. I guess we're thinking, my brain went to Al Capone as you were saying, criminal penalties. You know, I guess people go to jail for not filing their taxes. How frequent is that your experience?
Well, I think the criminal penalties, you know, assuming you're not a drug dealer or a famous celebrity of some sort, generally, they do not impose criminal penalties, but the civil penalties can be quite severe because generally what happens is that the amount of the penalties ends up being as much, if not more, than the amount of the tax. So all of a sudden, a $50,000 unpaid tax bill can become $100,000 or $150,000 just following statutory penalties out there. And so it's just not a good thing to do, period.
So you and I, we've talked about the impact of the pandemic, the CARES Act, and we've discussed those things several times throughout the course of this show. I think we've done 2 episodes specifically on the PPP and the CARES Act. So how did it affect individual taxpayers, particularly those who maybe didn't file for 2018 or 2019?
Yeah, let me just say this. All of what I'm talking about here applies equally to individual taxpayers and business taxpayers. But basically a couple things. Right now, the government is offering or has offered people $1,200 payments if they're under certain income thresholds, and they do that based upon the tax records. If you haven't filed your tax returns, you can fill out a form on the IRS website and give them your information, and they'll send you the $1,200. So that's sort of just half the story. The other half of the story is the IRS will then know where you are and come after you. So it's a double-edged sword. The other thing with the pandemic is that a lot of people just can't afford to pay their taxes, and this will become more and more important. And just one second, as it relates to businesses, sort of, let's say you're running a business and you're losing money and you need cash to just keep the lights on. A lot of people, or not a lot of people, but frequently people will not remit their payroll taxes to the government. And that's another big problem, which can also be quite serious. If you withhold taxes from your employees and then don't remit it to the government would take that as sort of stealing, okay? Because you had the money, you didn't pay, as opposed to if you just didn't withhold the taxes, that's bad, but it's not quite stealing. So there's a lot of bad things going on because of the world that we're in, the economy, and it sort of doesn't get any better by ignoring it. It's sort of like fresh fish. The fresh fish don't get better as it gets older; it gets stickier, and that's the way this whole situation.
So we'll make sure we try to touch upon, I guess, as we go through both if there are individual issues as well. If there maybe is a separate issue for businesses, go through our talk today. In the sense that, right, again, we can talk about numbers of taxpayers. Let me actually ask you this. In terms of people who are in this situation, how many people are there, or how many businesses are there in a situation where they haven't filed or haven't remitted taxes for one or several?
Yeah, what I'm going to talk about is the number of people who haven't filed taxes. And I'm not talking about they're 2 weeks late. I'm talking about people who just haven't filed tax returns for, last year or many years. And there's basically 7 million people that have not filed tax returns. That's a lot of people. And then there's 15 million people that have filed tax returns, but they're in collection with the IRS. So you're talking about a total population of 20 million people who have, serious issues paying their taxes, filing their taxes, et cetera. So it's a big issue, and it's sort of in a growth area for tax accountants.
Well, with that many people, there must be some clients. The question is obviously, many of them some of them obviously don't want to get in compliance, and then some of them do want to get in compliance and aren't sure how, and we're certainly going to be hopefully helping some of those people today.
Yeah, I tend to focus. I would not take a client who doesn't want to get in compliance, but I'm glad to help people who want to get in compliance. And oftentimes, I just working with somebody right now who, told me when we started out they can't sleep at night because of this. And generally it doesn't have to end up being that bad, assuming that you come forward and get the thing straightened out. But again, it's just one of those things that is a real, personal problem for people, that just haven't filed tax returns. And once you don't file one tax return, you don't file another one, and it just sort of mushrooms.
So with 20 million people who haven't filed tax returns, what are their potential remedies if they owe significant amounts to the IRS or even their state governments?
Right. We've all listened to the late night commercials that you owe, $100,000. We can get you off for $500, and that is true. And I've actually gotten somebody who owed $100,000 off for $500. But there are remedies, and there's basically installment plans that you can get with the government relatively easily. There's a thing called offers and compromise. That's what they advertise on the radio, where you get the $100,000 gets paid off of $500. And then there's the innocent spouse, that if you're the husband or wife of someone who has cheated on his or her taxes, there's certain breaks that you can get for that, assuming you aren't part of the, of the sort of bad deeds. And basically the other thing that is important, offers and compromise, that's the thing where you get rid of your taxes. On the commercial, makes it sound sort of very easy, and just sign up with these guys and they'll take care of everything. Before you can even consider, the IRS will consider an offer and compromise for anyone, they have to get totally compliant with their tax returns. So let's say you haven't filed tax returns for like 5 years or something like that. Before you can strike a deal with the IRS, you have to bring your tax returns up to date, which is not necessarily an easy thing to do. It's not an easy thing to do. It can take a while getting that all together. And then once you get it, then you can file for an offer and compromise. And basically there's it's like everything else with the government. There's no magic, one of these firms on TV that you hear. There's government rules that specify how these are supposed to work, how they forgive debt. It's not like there's somebody who's going to come and work some magic, because a government employee can't let somebody work magic. They can basically go by the Internal Revenue Code, which is quite specific, and there's formulas and there's formulas that they have to follow. You have to be compliant, as I mentioned. It's a fairly complex procedure, but it's when you get through it, it's good. And I'll just say one more thing. The other thing that's important when you do have an offer and compromise or any of these things is your offer and compromise says that you will remain compliant, like for the next 5 years. So let's say you get you go to the government, $50,000, they reduce it down to 20, you get into a payment plan, and then the next year you don't file your tax return. They will totally wipe out the offer and compromise. So it's sort of like being on parole, okay? And you violate your parole and you spit on the sidewalk and you're back in jail. So right. that is quite important. It's one thing that I make sure that my clients understand, that they have to be compliant going forward, and or all of this work will just be for naught, and they'll owe the $50,000 again. So that's important.
So what is it that you would be doing, for example, in dealing with an offer and compromise that's different than one of these companies advertising on midday or late night television that you're talking about?
I would say nothing. I mean, I don't know, it's hard for me to say these late night TV guys are good, bad, or ugly. I mean, there's a certain hucksterism to their pitch, but that could just be the way they make the pitch. But with me, you get somebody who's a licensed CPA, who basically is going to work with clients in an honest way. Also, one of the first things that I would do with someone is determine if they are capable of getting an offer and compromise. Because oftentimes, as I said, there's formulas, and if you don't meet the formulas, you're not going to get an offer and compromise. You might get a payment plan, but you're not going to get an offer and compromise. And one of the things that I do first when I meet with somebody, there's a process that I go through, and, I have a consultation with someone. I get an engagement letter which says what I'm going to do. I get a power of attorney, which is from the taxpayer as it relates specifically to the IRS. It's not, a broad power of attorney, but it basically allows me to get a statement from the IRS, and for the IRS to actually talk to me on behalf of this client. And So I want to sort of figure out which end is up. The other thing that's important, and I'm just sort of going on with the highlights here, is basically if you have a collection item with the IRS, there's a 10-year sort of statute of limitation tolling period. And if I were to get your statement and see that you have 9 years have already gone off and that in a year from now, they won't be able to collect the money, I would probably say, let's not do anything as it relates to these old expiring years. So it's sort of, you need to sort of do some homework on this, get the statements of account from the client, and and as I said, my goal is not to help people, cook the books on the tax return, but to straighten out messes in a way that's legal and advantageous to my client.
So if you're dealing with somebody who's, let's say you work with somebody, you determine an offer and compromise is right for them, might they expect, right? You mentioned the whole thing, knowing somebody who saved $100,000 for $500 in fee, forgetting the amount of fee that they're paying. And obviously that's a huge ROI, a return on investment for them. But what does it mean? What should they expect? Are they going to say if they owed $50,000, what would be the range of outcomes?
There is no range to the range of outcomes could be from zero reduction to $49,500 of reduction. The thing is that there's, as I said, formulas that have to be applied. So one of the things that's often difficult is that the IRS, the government, has published formulas. How much should a family of 2 people spend in New York City on rent? Okay, and the government's formula is like $2,600 a month or something like that. And yeah, it's pretty hard to find an apartment for $2,600 that you'd want to live in. So you basically, and that works for you and against you. So a lot of times people there's things on the government's tables, like let's say health insurance. Health insurance, a lot of people might not have health insurance, but the government, one of the things that's allowed is health insurance. So it takes going through the government formulas and their methodology and then suggesting some changes. So, you could be in a situation where they say you should pay $1,500 a month, and then you get $1,200 worth of health insurance each month, and the number goes down to $300 a month, and you get that paid off, and it's like $4,000 or $5,000. So the tables can work for you and against you. Against you if you want to live in a nice place in New York City. For you if you're not spending all the allowable amounts that you should be spending. And basically what I would do, let's say somebody had no health insurance. I would tell the client to get health insurance, and basically the IRS wants to see the last 3 months of activity. So once they have 3 months of health insurance, that can go on the form. You don't have to keep health insurance for the rest of your life, I'm just saying, but you have to have paid it for at least 3 months. So basically there's a certain amount of pre-offer and compromise planning that you can do to minimize the amount of tax that's owed. And it's like everything else with the government. There's rules and regulations and formulas, and offsetting that, I have software that I use that help me sort of wade through all these factors and optimize the client situation.
But that's great. There's planning you can do this is new to me, so this is great and awesome learning experience in the sense that there's planning you can do in terms of where you go for an offer and compromise, getting yourself ready for it before dealing with the government. That's awesome.
Yeah, and the big thing is you also need to be tax compliant. So I've mentioned that a couple of times. But you can't just walk in and say, here, fill this out, and walk out and you have an offer and compromise. You have to be tax compliant, and the IRS, they feel like they're giving you a big break, which hopefully they are. But they want to make sure that you're, not gonna, create more bad things going forward, and they want to make sure that you've gotten yourself up to snuff. And again, it's like anything with the government, there's rules and regulations. There's no real magic to it. Everything is, the rules. You have IRS regulations, and it's not like there's any hidden secret or some sort of razzle dazzle that any of these late night guys can apply. It just doesn't work that way.
So we talked about a little bit about offers and compensation. You also mentioned installment agreements. So tell me more about how, obviously, installment would say you're paying in installments, but kind of how those either interact or are completely separate from offers and compromise, and how client, how somebody in this situation might set themselves up for one of those.
Yeah, the installment agreements are an agreement where you pay over time to the IRS, and basically the outside amount of the stretch of the installment agreement is 72 months or 6 years. And essentially, it can be quite simple. So if you owe the IRS, let's say under 10 grand, you can go on the IRS website, never have to talk to a human being, apply for an installment agreement, and it's relatively automatic. Then if you owe them up to 50 grand, there's what they call a streamlined methodology, which isn't quite the automatic, but it's not, it's basically streamlined, again, filling out computer forms. And then above 50 grand is when it gets involved with talking to IRS people and so forth. And as I mentioned, that you have to take into account where they are in the collection procedure. So let's say you have an unpaid tax bill from 10 years ago or 9 years ago. I would probably tell the client, besides filing going forward and the more recent stuff, but I would tell the client regarding that tax year, let's do nothing, because the statute of limitations is going to run on it. And at that point, the IRS can't do anything. And again, each year stands on its own. I have software which, once I have a power of attorney, I can hook into the IRS's website, and they will tell me when the collection period expires and all sorts of good stuff. So it's not any magic that I have. It's, the way these things are done, and there's software that helps you to do it. And I use whatever I can to help my clients.
So what about, let's say you either get an offer and compromise, or somebody comes up and puts you in collection. How do you appeal it if you're not satisfied?
Well, I would first off want to know what the story is and how they got there. So I'll just tell you a story. I had a client, guy called me up and I'm going to say 7, 8 years ago, and asked me to do his tax return. So I went to his apartment in the city, and as we were talking, it seemed like not such a big deal. He told me, oh, by the way, my wife, his newly married wife, has tax problems, and she owes the government $150,000. And I said to her, so let me understand what's going on here. She got me all the stuff. It had involved a family business where she got on her K-1 from the business. She got all the income and none of the cash. So you get all the taxable income and none of the cash, all of a sudden you're going to owe the IRS a lot of money. And
Sure.
so, and I, that sounds obvious when I say it, but it was not. This woman literally came with, the brown key food shopping bags full of all sorts of notices, and they were suing each other, and blah blah. It was just a horrendous situation. And I came up with the bright idea of, I think what you have is a bad debt deduction. Bad debts that don't expire, like that expires in 10 years. And I came up with the idea of why don't we file amended tax returns to claim a bad debt deduction and saying that we don't think you owe the tax. And we did that. Now, the other thing that a lot of people don't realize is that when you deal with the IRS, things can take months and years, okay? So a lot of people think they file something with the IRS and like tomorrow somebody's gonna open up the letter. Right now, there's like tractor trailer truckloads of unopened mail at the IRS because of the pandemic. But in the normal case, the IRS, you know, has their budgets have been cut, their staffing's been cut, the tax rules get more and more complicated. So things can easily go on for a year or two. And in this case of the one with the garbage bags, I would call the IRS and say, what's going on with our amended return? And they would tell me that it's going to be assigned in 45 days or something like that. 60 days would go by, I didn't hear from me. It went on for like a year and a half of being told it's going to be assigned. So I wrote a letter to the taxpayer advocate's office, which is the representative, an IRS employee who was out to represent the rights of taxpayers, saying, listen, this thing has been going on for years. We don't think we owe the money. We also, you know, she's still getting these letters from the IRS, which are very, you know, troubling to any sort of normal person. And she said, I spoke to the woman, the taxpayer advocate person, and she said, we'll get this assigned right away. 2 weeks from then, I got a call from an IRS agent who said he's been assigned because of the taxpayer advocate to handle the situation. And he said, you know, I'm going to send you a list of information that I need. So I got together the information that he needed, and I thought we had a very good case. I mean, you know, the taxpayer herself was just sort of very frustrated and somewhat obstinate, but I thought we had a winnable case on this. And so I got him the information, sent it over. I like to keep things organized and loosely find with the yes, here's question number one, here's question number two, you know.
Sure.
So that to make the IRS agent's life easy, that's a good thing to do. And so anyway, he said, I want to get together with you. He said, you can either come to Jersey, you can come to New York. So I said, come to my office in New York. Bottom line, as he was coming in my office, I was opening the doors at the front door, you know, to welcome him. He said, by the way, I read all the stuff you sent me, and I totally get it. He told me. I totally get it. And in effect, you know, it took a while to get this all resolved, but she basically got off about $100,000 of taxes and penalties. One of the things is the penalties are often many more times than the taxes. So if you get $5,000 off in taxes, that might be like $7,000 or $10,000 in penalties. So, you know, the numbers can go down quickly, the reverse of going up quickly. So, but basically I would first, before I say I'm going to try offering compromise, I would want to know what's going on. And quite honestly, this particular person had assets. They would have never gotten an offer of compromise. I would not have filed an offer of compromise. But I thought she had a good situation. We got our amended tax returns through, and we got like $100,000 off her total tax bill.
That's pretty significant. So it sounds like good work.
It's good work. The thing that's difficult about it is it doesn't come, you know, what I'm explaining to you is sort of sounds intuitive or obvious, and it doesn't, and it isn't, it's something, you know, it sort of takes some creativity, and it also takes some persistence. If I had not written that letter to the taxpayer advocate, I'd still be waiting for the IRS agent, you know.
Well, that's actually interesting because, you know, I mean, for me, one of the things I certainly wouldn't have known about the IRS before this conversation is that there actually is somebody there, kind of like an ombudsman in a newspaper, who's actually supposed to represent taxpayers who have an issue. So
that's exactly what she is. It's like an ombudsman in a newspaper.
So that's pretty interesting that that exists, and you know, obviously you in your professional capacity have a unique opportunity to talk to somebody on your client's behalf when it's appropriate and they have a specific situation, better than sitting on the hold with them for hours or days, as I'm sure many people are accustomed to.
Mm-hmm. Right.
Yep. So one of the things that we kind of talked about, we're in this unique situation. Obviously, we had, you know, the deadline backed up 3 months. As far as I know, the extension deadline is still October 15th, still the same. But if someone owes, we've kind of talked about things they can do, but if someone maybe owes taxes for this year or hasn't filed a return, you know, what should they do? I mean, I've had conversations with other people in your field who've kind of said, you know, with COVID, it's a special year, enforcement on deadlines might be a bit lax. What's your thinking?
Well, first off, they should file their tax return. Okay? Nothing gets any better because you haven't filed a tax return. There's also something, if you've always kept your nose clean with the IRS and you've never gotten any penalties and filed all your tax returns, there's something called a first-time penalty abatement. So I would say that you should get your taxes paid. If you don't have the money to pay the taxes, I would go for an installment agreement. You file a thing, and then they say, well, you filed late, and you got this and that, what have you. I would then request a first-time penalty abatement. But again, all of this should be done on sort of a proactive basis. And the other thing I would say, if you were the taxpayer, you know, I've been in situations where, like, wives or former wives of people, you know, they're going through a divorce, and it's a very emotional situation, and you know, my client wants me to tell the IRS what a no good so and so her former husband was, and I kept saying I'm not going to do it. The IRS doesn't want to hear sob stories. After, you know, a while, I said, if you want to send a letter, go ahead. I'm just not going to be involved in that. And basically, you know, the IRS goes by rules and regulations. You know, there's not allowance for empathy because your former husband was a bad person. And I would say that's something that, you know, a non-professional, you know, might be more emotional than me, who goes about it saying, well, what are the rules that I can use to my advantage to help my client?
Well, Jack, we know you're not emotional. You're a robot, right?
No, but it doesn't. What's the old saying about a lawyer who has himself for a client has
He's
a
a fool.
fool? It's
Yeah.
the same thing with this situation. You're just better off not doing it yourself. You could. There's no rule against it, but you know, it's just the other thing that a lot of people don't do is they see a letter from the IRS and they don't open the letter, okay, and let it pile up and stuff like that. That's why when I get involved in a situation like this, they get a power of attorney, and any letters they send to my client, they also have to send to me. So I sort of know what's going on, and I think that's a good thing, because you know, the last thing a lot of people want to do is deal with a letter from the IRS. It gets on the bottom of the pile and maybe never comes up to the top. But that you shouldn't ignore any of the stuff, although there's what I would say a natural human tendency for people to do it. And let me just say one more thing.
Sure, Jack.
I've done this a fair amount, and I've had a fair amount of success with it. And one of the things that I don't do is I don't criticize my clients and say, how the fuck did you not file your tax returns? You know, I basically do not, you know, I'm not looking I'm looking to help somebody, okay, as opposed to say, you know, how'd you let this happen? No good so-and-so. You know, sure, somebody who honestly wants my help to get a problem solved, I want to help And there's no benefit to anybody criticizing any of my clients. So there's no sort of value judgment. To quote good old Donald Trump, it is what it is. And we just, try to just deal with what it is.
Right.
And
deal with the facts on the ground. Yeah.
Yeah. And that's so it's not, I don't try to shame someone because they haven't filed their taxes. I might ask somebody how it happened and what's going on and stuff like that, but I don't shame people. And I think that's just my own personal style.
Right. And it makes sense to be forward looking and saying, I'm trying to get you out of a problem, not how did you get into it and you did something wrong. It's just you're trying to be forward looking and help clients solve.
Yeah. And most of the people that I deal with, and know they have a problem, they tell me I haven't been sleeping at night, and, I wouldn't be sleeping at night either. I mean, it's just, it's, not a good time in one's life to be, not dealing with your taxes.
So in regards to the 10-year situation, right? So you said maybe if somebody's hasn't really, now I assume that means they haven't heard from the IRS in 9 years, you might tell them not to do
No,
something?
what I'm saying is, let's say they have heard, well, yeah. If the IRS issues a lien on your assets, okay, and they don't, seize your assets, or they don't, it just sort of festers there. Again, I think I mentioned at the beginning, there were 15 million people who owe money to the IRS. That's a lot of people. And there's 7 million people who haven't filed tax returns. So we're talking, it's not like, 2 or 3 people, we're talking millions of people and millions of cases and overworked IRS. So basically they are not going to go after money that's 20 years old. They're probably not going to go after money that's, 8 or 9 years old. And what I'm saying is, I want to know, if there's liens or notices issued that you owe money. And, I want to know when those were issued and when the 10 years is up. And that's something that I have software that helps me, puts out a nice chart year by year by, what's owed and when it expires, and, whether you can get a first-time penalty abatement. It just basically, once I get a power of attorney, I can basically get into the IRS's computer and know whatever it is that they sort of know, more or less.
But right, understanding what they know. So just so I have an understanding, and I, I'm not an attorney. I know you're not an attorney either, but you have more of a working knowledge of this than me. So if they've got 10 years to collect, right, like what actions can they take in other words to keep that clock going? So, right, is it as simple as having written you a letter? Is it starting some sort of greater action, civil or criminal? What is it?
It's the reverse. Okay. So the statute is running to 10 years. So I'm in year 9 and I say, now I'm filing an offer in compromise. That stops the statute from tolling. So it freezes, it doesn't go past the 9 years till we deal with this situation. So what I'm saying is I would do nothing other than, tell my client, listen, a year from now, they're going to, according to IRS rules, they're not going to be able to collect this. So let's not do anything. You don't want to sort of bring this up to the top of the pile or do something that's going to stop.
Right. No, I understand exactly what you're saying, right? Why would if it's 9 years, why would I proactively go try to do an offer in compromise? Because again, if they just wait a year and do nothing, I'm okay. So the question is what can the IRS do to say, okay, now I'm going to, what can the IRS do to stop that clock? So for example,
I think
if they write you a letter,
is seize your assets. I mean, that's what they maybe should have done, or they might have come to the conclusion that there are no assets to seize. And that could have been like 6 or 7 years ago. And you've now gotten a job and so turn life around, and now there are assets. There's a status of called uncollectible in the IRS, which basically says that someone has decided there is no money to go after.
Mm-hmm.
And again, the IRS has millions of these situations. So, I'm just saying that you need to know where you're at, and I wouldn't do anything until I know where the client is at and have an approach that I'm going to follow to get this straightened out.
Fair enough. So to put all, somebody's in this situation, they haven't filed for a period of years, or maybe they didn't file for a couple of years a while back and nobody's come after them, or maybe they get a letter from the IRS about something. All these, I guess, are realistically possible scenarios that can happen. So to put all this behind them, aside from calling you, what else should they do?
Well, I would say, they should start filing their tax returns. I've said that a number of times. I would say that if you're married, you might not want to file a joint return. Let's say you have the husband's the bad guy and the wife is, the good guy. I wouldn't get into a joint return with a bad guy because you both owe the money then. But yeah, I would file my tax returns. The other thing is that the IRS sometimes issues an assessment, so they will calculate the tax that they say you owe, which is basically a ridiculous calculation. Okay. And so, like the worst case possible scenario that there possibly could be, and I would then say that was like my client with the $150,000. That was one of the things they did. But I would file an amended tax return. I would deal with stuff. But if the IRS is going to say you haven't filed your tax return, you ignore it, and they say, okay, we're going to compute your taxes. And last year you made $200,000. We'll assume this year you made $250,000, and last year you itemized deductions. We'll just take the standard deduction this year, and then we'll have penalties and blah blah blah. They make a calculation which is sort of what I would call a worst case scenario, and when that comes along, you should deal with it. But that's sort of what they do, and you haven't responded to them, so they come and make their calculation, which is not going to be an underestimate.
So if someone does, right, and they want to get themselves on the right foot, they want to set up a meeting with someone like yourself to get their tax situation in order, what should they do, or what documents should they have to prepare to meet with someone like yourself?
Yeah, I would say that I have a list here, but the process I would go through is I would meet with someone. I'd want to come away being retained. I want to have a power of attorney signed. I want to pull IRS transcripts so I know what the IRS knows. There would be a question of, let's say it was a business or someone who's a sole proprietor. I would want to make see what their accounting records are like. Then I'd say, we prepare their tax returns, file their tax returns, and then resolve the tax debt. If there were any notices from the IRS, I would ask them to bring those to the meeting. The other thing, let me just say this, like also when you file for an offering compromise, you have to list all your bank accounts and so forth, and they want to see copies of them. And a lot of times people might just leave off a bank account. Okay. Sure. And I would just say you're dealing with the Internal Revenue Service. They are going to find, they can just do a search on your Social Security number and find out every last bank account that you have. And so that it's no, there's no, and quite honestly, if you're not telling me all the bank accounts, I might have said, let's do an offer and compromise, when I would not want to do an offer and compromise had I known the real situation. But I would say, they need to bring their bank statements and I would go through a conversation that would, cover the items that I just mentioned in the last 30 seconds.
Fair enough. And like you said, the process can take a really long time. So, just be prepared.
The process, let's say the process, there's the process once you file can take a long time. But as I said, also, I would not file until I'm totally tax compliant. So let's say someone has a business and they haven't filed tax returns, they would need to get their books up to date and before we can file tax returns.
Right.
That might be something that could happen quickly. That might be something that they want us to help in. We could certainly do that. They might want to say, geez, I don't have, I want to keep my costs down. I'll do the books. That's fine with me too. But, whatever makes sense from a client's point of view, but it's going to take a while to just get your books up to date, to get your tax returns prepared. And then once you file, it's going to take, a year or so for the IRS to get around to reviewing what you filed. So it's a long process. The good news, Russell, is that once you start filing and contesting things, it sort of puts a hold on what the IRS can do, so that here we are, we filed these prior year tax returns, we've filed an offer and compromise. It sort of puts, hopefully they're not going to come along with a tow truck and take your car away, because, they shouldn't. Basically, you need to get due process and it sort of stops a lot of potential bad things from possibly happening.
Very good. So, thank you for your time, Jack. If there are any questions out there, I know I've kind of forgotten to mention as we go along, we got very deeply into the conversation. You do have the Q&A tab at the bottom of your screen if you have any last-minute questions for Jack or myself. But while we wait for those to come in, tell us a little bit, Jack, about how people can contact you if they're dealing with a situation or want to get more information about whether or not, and how to go about this process if they haven't filed their taxes in several years.
Yeah, I would say that they should call me and we should talk and I want to get an understanding of the situation. We should probably have a meeting in my office, pre-COVID. Right now, we don't do meetings in my office, but essentially, we would have an initial consultation with clients, which we charge $350 for.
And what's that phone number, how they can reach you?
Okay, well, my office number is 212-786-7476. And right now I'm working from home and my cell phone number is 516-606-4958. And, I have, I'm on the internet. If you Google me, it'll
well, as we said at the top, mediacpas.com. So you can reach out to Jack there if you have any other questions. So Jack, thanks for joining us today. I really appreciate it.
Okay, my pleasure. Thank you, Russell.
Yep. For those of you who wanted to talk to me, you can reach me at russell.rivera@voicewealth.com, or you can give me a call at 646-630-0980. For those of you watching today or who have signed up for this or any other Discuss with Russ, we will be sending a follow-up email with a link to the recording, which you can also view in about a week on www.voicewealth.com/blog, or you can view this or all of our videos, all of our episodes, and all of our non-episodes or other videos on the Voice Wealth Management YouTube channel. As we head into next week on August 19th, Aaron Ship of the IB Edge will join us to discuss the very rapidly changing situation regarding higher education, not just with whether or not students are going to school, but also admissions. Maybe we'll get into athletics as well. But if you'd like to register for that, reach out to me again at russell.rivera, russell.rivera, Rivera, at voicewealth.com, and check your email inbox for registration emails next week. So thank you again for joining us. Thank you, Jack, for joining us, and we will see you next time.